guys. Good evening. I'm glad that you all could make it today, and we're also excited about learning today because I'm going to go right down into it. And today we're going to actually be having a recap of everything we've learned so far, just trying to bring everybody up to speed, especially for those that probably did not get it in the last class. So today we're going to be talking about opening our first brokerage account for those that have not yet done that. Finding and funding our accounts, and we'll talk about the common mistakes that a lot of persons make when it comes to investing. So quickly, a quick recap. A stock is a piece of a company that when you buy, you own a part of that company, right? And where a unit of a stock is called shares. So you hear people say shares a lot. It's very similar to stocks. It represents, like the name is share, a share. It represents your own share in that particular company. And when you own a company, you're now called a stockholder. The stock market is where people come to buy stocks. So it's like the marketplace where different companies are selling their selling part of their companies to other people. Some other people are coming to buy from those companies. It could also be individuals that are selling what they already own and people coming to buy, right? And then just people can buy directly from the company, or generally using the stock market is, especially now that we have online access to buy it instead of going to different brokerage companies to buy. So we can now buy from the comfort of our phones compared to going to a particular building where stocks are being traded. So when we want to get stocks, we have to think about the categorizations of stocks, whether it's based on the company size, the industry sector, geographical location, or your own investment style. You have to consider these categories when you want to invest. Even the risk factor, like from our poll, we realized that most persons are not afraid of losing their money, but they just want it to be, moderate. So it's one of the reasons why we actually consider the categorization of stocks, or why we even consider to categorize stocks. Stocks are classified by ownership rights, whether it's common stock or preferred stocks. We learned that common stocks are those stocks that allow you to vote, be a part of their meetings and all. But when it comes to liquidation, they don't put you first, they put the people that own companies and bigger shareholders. My preferred stocks don't pay, they invest dividends most of the time. They don't also give you the right to vote for policies or for things in the company. But when it's time to liquidate, they pay their shareholders first. Then we think of it by earning. So do you want to make money from the stock? Do you want a stock that pays you consistent dividend, or you want a stock that just increases in value? We have by investment style as per the kind of company you want to buy, or the kind of investment you want to make. Do you want to go for a company that is already valued very well and they're consistent, they're growing, or you want to go for a company that has potential to increase its value? Usually they're undervalued companies. Then you can also consider the market size. Do you want a big company, a new startup? Startups have potentials. They have potential of growing, or mid-caps, ones that they're not yet there. They have potential of being there, but they're stable enough, better than small. That's the mid-cap stocks. So two other categories I'll talk about are the economic style. These are divided into two. We have the cynical and the defensive. So this is based on the stock reaction to the economy. So cynical stocks are stocks that they react with the economy, like when anything happens to them, the economy, whenever the economy is bad, they reflect it. Why? Defensive stocks are stocks that no matter what happens, in fact, as the economy is going down, they are going up. So for example, let me just use in layman terms, what we're talking about is, how the price of fuel in this country affects almost everything. The moment price of fuel goes down, goes up, transportation, feeding, almost everything goes up. But in spite of all of these going up, there's some things that their prices remain the same. So these are one of the things you want to consider when picking a stock to buy. So we have what we call blue chip stocks, which are our very, very big boys in the market. So I sent this in the email as well. So these are a few examples of some stocks based on categories. So the note says that some stocks can fall into more than one category because we're just trying to describe their nature. We're trying to say, so let's assume I want to buy a company. I want a big company. I want a company that pays me dividend. I want a company that does not fall when the economy is falling. I have literally described three different categories. I've talked about market capitalization, that is the size. I've talked about the economical reaction. I've talked about the investment type. I've talked about the earnings as well. So you can find stocks in like three different categories. It just depends on what exactly is your goal. This is why the first week we were asked to actually make our investment plan. What exactly is your goal? Why? What do you want to achieve? How soon do you want to achieve it? Do you get when do you want to achieve it? These are the things you consider. 10, 12 years, right? So I'm going long term. But if it's something that I want to sell this stock in 2 years time. I just want to make my money sharp. In 2 years time, I want to buy a land. So I want to invest heavy. You know the kind of stocks you want to invest in. It's not a long time thing. This is a short time thing. So consider all of these examples and still look at your watch list that you created last week. So how do we earn? We talked about what dividends were. Dividends are irregular payments from a company's profit to the shareholders. We have different ways. We have companies that pay annually. We have companies that pay quarterly, depending on what how the company runs. Capital gain is the earnings that comes from you making profits from off what you bought it. So you bought it at a cheaper price, bought it at $50, and now it's $150. You have made an extra $100 on it. So you've earned $100 because the stock grew. That's what we call capital gains. Now, dividends, because they pay dividend doesn't mean that it's not going to grow. Just that most dividend paying stocks, they don't grow as fast. Most companies that pay dividends, they pay it to attract shareholders, means that they have enough money. Instead of them investing the capital back to themselves, they can afford to give it to you so that you keep your money with them. They don't grow as much because most of the time, not always, most of the time, they're already very much established. While other times, they probably are just good with their business and they don't mind sharing with the extra or a piece of their profits. So we then have stock trading. This is where people actually trade in the stock market. So just like how Forex trading is or crypto trading, they bet against the market, they buy against the market, they sell against the market. And funds, we talked about the different types of funds. We have index funds, ETFs, hedge funds, mutual funds. This will combine the big tech companies together in one. We can have index funds on oil sector, health sector, different things. So they usually could be mix of different sectors, right? They could be a particular sector. They're a way of you kind of like diversifying your income or your portfolio so you can invest in so many other firms at the same time. Then we have ETFs, extended traded funds. These are a part of index funds, but they trade like a stock. So you buy them the same way you buy a company. So ETFs are combination of different companies. If you see an ETF, all you have to do is check the companies under it. So what they do is they kind of spread your reach. So they can pick the top 100 big companies in a particular sector or in the whole stock market. And then they buy a piece of everything and into one. So when you buy from them, you're sharing money among these 100 companies. So one of the good parts about ETFs is that it kind of gives you an average of a lot of companies. So you're not just investing in one company, you're investing in all the companies in one, like an average. So index generally tracks the market. It just depends on the kind of indexes. Then hedge funds. Hedge funds that are traded for wealthy, rich people. So it's almost like an investment company where people that have a lot of money to invest and are not scared of risks. And mutual funds is a combination of different things. It doesn't even just have to be stocks. It could include treasury bills and some other things. So it's a combination of different investments. That mutual fund is like you're paying someone to have a mixed portfolio for you. So this person trades stocks for you, or this company trades stocks for you, invest stocks, your money into different stocks. All you have to do is just pay the commission. Hedge fund has a higher commission, but they make you a lot of money. ETFs act as stocks. Index funds are just a general overview of the market because it's a combination of a sector or a type. I'm rushing because this is not the main gist for today. What are we going to learn? We're going to learn how to open our brokerage accounts. For those that are yet to open their accounts, we're going to learn how to fund our accounts, and then we're going to learn how to create a watch list and basically the common mistakes. I know for us, for many persons here, what they might really be into might be the watch list. I will talk about some stocks we can buy. Like I said earlier, when you want to get a stock, buy a stock that you are familiar with. When I say stock, I'm referring to company. Buy a company you're familiar with. If you're very good in tech, go for tech industries. Not just tech industries, but majorly tech industries. If you're in the banking sector, awesome. If you're in the health sector, awesome. Real estate, go for real estate-based stocks. If you're in the oil industry, have them. Why? Because you would get insider gist. I'm already going ahead of myself, but you get insider gist ahead of other persons that are not aware of what's going on in that particular industry. So we have a few brokerage accounts in Nigeria, and I just listed out about 7 of them. Bamboo, I sent this to the group already, so for some persons you've already seen it, and it comes with a link. So Bamboo is amazing because of the UX. It has a very lovely interface. I'm just going to talk about the unique features of this. I've only used the first 3. I haven't used the others, so I'm just going to give you the best of my knowledge from this one. Chaka is for those that are already into stocks, like you want to see the analytics. It's more detailed than, because Chaka is good for those that want to trade. The analytics and everything comes off amazing, as opposed to Bamboo that is just general, right? It doesn't give the in. Suppose I want to probably see candlesticks, Chaka is for you. Trove, I like Trove. Trove gives free stocks when you refer people. So please people should use my referral code. So yeah, Trove is it also goes beyond US and Nigeria market. That's one advantage of Trove, of using the Trove app. RiseVerse is good. Afriverse, HeadCarryWise too does the same. So to the best of my knowledge, and yes, I have stocks in both Bamboo and Trove. I don't have stock in Chaka. I can't remember why not. And Chaka, they were the first to actually get certified by SEC. They were the first trading app. Even Trove they made it to the to having backup before Bamboo, because that's why I actually started using Bamboo before I heard that Chaka and Trove were like the most recognized by the by SEC. So I went to download them and I decided to spread my basket. That's how I actually got to use these 2 apps. So common mistakes that people make when you're buying stocks. You buy stock at its highest price. I made that mistake. I bought Nestle at 1,500 2 years ago, and it refused to come down. Currently, Nestle is 1,900. I was not patient. If I was patient, I waited for 2 years, guys. I bought a stock 1,500. When my mates were waiting for it when you're selling at 700, I mean 600 that year. God, the mistakes I made in stocks. Look, I crawled that you guys may walk. So please use my referral. The next thing is, so why don't we buy the highest price? Because capital gain is one of the ways we make money from stocks. So if you buy it at the most expensive price, it means that stock has almost 70 to 90% of going down. And when it goes down, you're losing money. You can hold it. If I'd held Nestle to this year, I would have at least made almost 400 naira extra per share. But I waited for 2 years, guys. I tried. I paid the price of my mistake. I lost, but I sold it at 1.4, so I lost 100 naira per share. It wasn't so bad. I'm complaining too much for something that is so small. Emotional. They imagine I bought that thing like 100 shares. My life, 150k. I'm easy 150k. 2 zeros, yes. So the next is emotional investing. That's investing based on your emotions. So you hear that, oh my God, this Nvidia is making money, and you're feeling all, when you're being sentimental, because every time you make a mistake is very high. You don't even know what's going on. You're being biased towards a particular company. I hate Apple. I'm not going to buy from Apple. I'm going to buy from Samsung because they are my thinking, or I like Apple I'm going to buy from Apple. You're not even caring how is Apple market doing generally, like what is the news saying about Apple. You're just being emotional and being sentimental about a particular company. That's emotional investing. It's one of the mistakes you can make by being emotional or being sentimental when you want to buy stock. Another mistake is not diversifying. So you decide to, I have 10,000 naira, I decide to buy stocks. I think I'll do a screen recording of how I'm going to share that 10,000 naira in my mom's account. I'll share it, maybe 5 stocks, depending on how, I can decide how I want to share it. I'll just do a screen record and send to you guys if need be. Or maybe I'll attach it to this video when I'm uploading. So diversifying, don't put all your eggs in one basket. I can't put this 10,000 naira in Tesla. What if I put in Tesla tomorrow, Elon Musk and Trump decide to fight and all my 10,000 naira goes via, and then you know, consign, I've lost my money. So it's one of the reasons why it's good to have some of it in tech, have some of it in tech, have some of it in healthcare, have some of it in real estate, diversify your portfolio, right? Another mistake is following news and trend. There's a saying, when it's in the news, you're already late. The moment it's in the news, you're late. I did that. When Africa is supposed, if you bought this share so time, you're going to get something. I did that last year. And out of all the recommendations they made last year, I picked some of them, not all. Only 2 profited me. The others, maybe people saw the news and decided to sell their shares, and then the shares plunged this year because it happens. I will explain that selling thing in the next class. I don't want to overstay, but don't follow the news, don't follow the trend. News and trends are good, but they shouldn't be the main reason why you're buying things. If you're buying it because everybody's making money off it, remember that some people want to sell at the highest. Some people feel like, oh, I've made a lot of money from this stock. Let me sell it before the price goes down. And then you're buying into it and then it never goes up again. And most of the time you buy it at the highest price. The next thing is investing without knowledge or understanding. That part you guys have escaped because you now know more about stocks. You know how to buy stocks. You know how to diversify your portfolio. You know what kind of funds to use and all. And then waiting for the right time, saying you're timing the markets. The right time might never come. Today, right now, could be the right time, right? Sometimes you're waiting for the market to come down. We saw, was it Nvidia that it had 80 something at its lowest? You're saying, oh, I'm waiting for it to reach that time again, and then it might never go down again. Are you praying for bad luck for the company? As you're praying for bad luck, they are hitting deals and they will never hit that target. Their lowest might now be their current highest, and you will not buy. So if you're always waiting for the right time, the right time, when I make this money, that's when I'll do it. My dear, you may never make a step. Have a bias for action. So take a step right now. And then, so next week, we're going to talk about stock analysis. We're going to analyze a stock. Like I already said it briefly, but I will focus on it. I will also focus on something I said I was going to focus on. So I'm talk about the kind of stocks you should buy, how to diversify your portfolio, talking about building your portfolio and your risk type, and we're going to talk about different terms in the stock market. So for you guys attending this class, I'm going to advise you to buy stocks, buy banking stocks in Nigerian sector. You can buy your bank after they're charging you for it. So that when you get debit alert, you feel like I'm an owner. Like when your friend is complaining that, oh my God, GT just debited, you be like, yeah, to pay me, because GT pays dividends. So you can buy 2 or 3. It's fine. Don't just buy one bank. Buy 2 or 3. Advice you. MTN is doing very well right now, but MTN compared to Airtel. When I found out Airtel was 715, I don't forget that Airtel is an Asian-based company. I was like, Airtel, okay, Airtel. See, yeah. So you can look at MTN. Just keep it on your watch list. So it's currently selling at 500 or something. If you see it around 400 or something, go ahead. If you never want to wait, if you're a long-term buyer, go ahead and buy Airtel now. Then go for dividend-paying stocks that pay you dividends. So just look for stocks that pay dividend. When you click on it, you see dividend. I'm so sorry I didn't show you guys. I'll show you the next class. But if you look at your interface, you're going to see dividend equals to a particular amount. You get to know. Sometimes you go online and check. Even ETFs, go for ETFs that pay dividends. So I advise you to get index stocks, get ETFs, S&P 500 that contains the top 500 companies, how many $1 million companies, the top 500 companies in the US market. Buy into ETFs. Go for ETFs that pay dividends. As you've gotten ETFs, most of the time, especially S&P 500 or Vanguard, They already have most of our big tech companies. But for the fact that I have those ones, I still have a few of the big tech companies individually. Buy Coca-Cola, it pays dividend. I have plenty stock that pay dividend, but Nestle too is doing very well. It's quite expensive, but it's doing well. And Nestle is a food-based product, meaning that it kind of stands against the economy. So go for defensive stocks that no matter what Tinubu or Trump is doing, they stand tall. Share your this thing. US stock market, go for tech companies. Which other company can I advise you guys to go for? I started this year with oil companies and they've been showing me red. Fund your account, buy your stocks. Guys, we are buying stocks this year. We are even I funded my mom's account. She's buying stocks this year. That she's have investments. Please buy stocks this year. I have not stopped buying stocks. I have over when I checked what I wrote last year for the number of stocks I bought, then even if it's chicken stocks I bought 16 stocks. And even if it's only 0.000, I'm increasing them small by small. Before you know, guys, oh God, I'll retire. I'll retire at the age of 40, no, 35. And I'll tell you that I told you in October 2025 that you should buy your stocks. I'm ending this class now. Please, does anyone have any questions? We're already late. Thank you all for joining. Have a lovely night rest. Good night.